Hey guys, this is Jay, independent trader for the last 12 years and founder of Sim Trading. Alright, so here we are at the Kopi Money Challenge that is brought to us by Investing Note and Societe Generale. And we have our fellow challengers, right? Dan, as well as Lin, to including myself, right? We come together from different background, quite diverse to be honest, and see if we can make use of bite-sized account and trade using DLCs. And meanwhile, right, let's have great fun in this whole progress, in the whole journey of discovering this new instrument. It's not new, I am new to this. Okay, so admittedly, right, Dan and Lin, they have been veteran members of this community, and you guys have been looking and seeing their posts about their trades as well. And for me, right, I come from a very different background as compared to them, because predominantly I'm trading the US market. I have been using underlying, I've been using options, I've been using CFDs on the US stocks itself. But when it comes to this challenge, right, my very first thought honestly was like, why me? Because from what I understand, DLCs, daily leverage certificates, they focus and revolve mainly around Singapore and Hong Kong stocks. And in a good spirit of this whole challenge, right, I understood where Investing Note and SocGen were coming from, because they want traders that are from very different backgrounds, including myself. So admittedly, I'm a newbie over here when it comes to DLCs. They want to see if it is possible for me, right, to make this transition, and what are some of the challenges, what are some of the fun, what are some of the advantages that I face when it comes to this transition. So here we are doing this, documenting down my journey. So please be kind with me, and if you find the next 10 minutes entertaining, do engage with me in the post below. Give me a like, share with me your comments, let me know what have you encountered so far using DLCs, and let's have great fun. All right, so now let's transit over to my charts here. Yes, this is the Kopi Money Challenge that's lasting for 3 weeks from right now to end of this month. And admittedly, right, I am kind of late to this party because I have been seeing Dan and Ling just posting and posting. I was like, wow, you're so active, so enthused. And I was like, hey, I'm still figuring out how to use leh. So if you're like me, you have traded before, you have used underlying, you have used CFDs, if you have used other instruments before, but have not, dare to venture into the world of DLCs, right? Let's join me on this journey and have fun with me, laughing at me, making silly mistakes. So yeah, and here you are, right? If you like my post, if you comment in my post, you will give yourself or win yourself one chance. If you share your own DLC trades in the comments as well, you will win 5 chances. And if you share your upcoming DLC ideas, you will have 3 chances to do what? To win, literally, a copy machine. So, unfortunately, Dan, Lin, myself, we are unable to qualify for this Nespresso coffee machine. Hinting Investing Note to send me one. Okay, so now, how do I begin, or what do I do, right, when it comes to DLC? And admittedly, I was very, very late to this because I was kind of a little bit stressed, because this is something that admittedly is not my domain. It is something new to me, although I have been trading quite a while in the US market for the last 12 years. But this instrument itself is new to me, and the market is kind of new to me as well, because I'm going to be using Singapore stocks, Singapore DLCs, as well as Hong Kong stocks, Hong Kong DLCs, to make a series of trades. And who knows how it will turn out, but hey, let's learn from the mistakes, let's learn from the winnings as well. And I hope that you will join me on this journey, and let's learn together lah. And then let me know your comments, let me know how I can improve, and if you've got some learning point from me, then that's good as well. All right, so do remember to engage with all of us, to like my post, to comment Dan's, Lin's post as well, and stand a chance to win this Nespresso machine. Okay, so what is my background when it comes to trading? Now, for my style of trading, right, I am a momentum trader. I like to trade the kind of trades that usually swing for a couple of days. I'm not the kind of long-term investors, so I'm definitely not a fan of buying stocks like this that have been going down for quite a while. So I like to trade with momentum. I like to find those explosive stocks and get into my setup. So this is where, right, I'm also looking out for opportunities. And in the Hong Kong market, I have been tracking these few strong stocks. So the strong stocks, right, in this sense, right, please do not mistaken all this as recommendations that you should be buying or selling or any of this. This is not the nature of the intention of this post. This is what I do as a trader, and generally what kind of setups, what kind of stocks do I like. So I'm sharing this with you so that you can get the context of where I'm coming in. Because if you were to apply my strategies, right, or my insights on this kind of range bounding stock, then it wouldn't make sense, and it will usually often result in a loss. So this is what I'm really I would say decent, good at. So I'm just waiting, right, for the kind of setup that is happening and looking to use DLCs as an instrument to get in, because traditionally, the first go-to instrument for me would be CFDs, would be the underlying itself. And then now I want to make this transition, right? What are some of the challenges have I encountered? Like, for example, I was looking at Alibaba. So this is the Alibaba Group holding that is listed on Hong Kong, okay? So you can see that it has come off a huge downtrend, and recently there is a breakout. But I am a little bit skeptical about this breakout, and I have been waiting until today, which is a Thursday, to produce this content, right? Because I was waiting for what would happen in the FOMC, which happened last night. So as expected, FOMC, they announced a 75 basis point increment. So generally today the market is kind of taking, okay, it's already priced in, it's staying as where it is. So looking at some stronger Hong Kong stocks that is looking to turn around, looking to pick up itself from the bottom. We also have Meituan, we also have China Power, a lot of energy stocks, they are moving as well. So how do I go and chase, or how do I go and get into this company? The key here is I do not chase, okay? I do not want to chase. So if let's say I want to be looking at Alibaba, okay, let's say now I'm looking at this, I'm looking at Alibaba, thinking to do a swing trade, and at the top right here, right, this is my I do think that there's a very strong resistance over here, and granted that today when it opened up here and then it flashed down throughout the session, which is still live right now, and right now is at 103. So there is a $10 underlying gain on Alibaba, and admittedly, right, if I were to look at the stop loss amount, it would be about $6. Okay, it will be about $7, $7 to $8. All right. So this is a positive risk to reward trade, which I think it kind of justify. And if it doesn't happen, right, if it goes down, then I unfortunately will have to take a loss. So this is part and parcel of planning a trade where we don't just expect it to go a certain way. We also plan for the flip side so that we are able to watch our position size moving forward. We are able to plan out our position size, we are able to plan out our stop loss level as well. So now looking at this, right, I want to use DLC to trade this. My first question would be how. And admittedly, like now you know, right, I am a newbie when it comes to DLCs. Unlike my fellow challengers, Dan, Lin, they have already been using this. So to them, it's like fish in the water. To me, it's like, oh my gosh. Okay, so on the website, right, for SocGen, right, I realized that they do have very extensive resources that covers quite a fair bit about DLCs. They have educations about handbooks, and then they have different tools for comparison, profit and loss calculator, simulator, price matrix, etc. So this is where in the first site, right, I will go into to get some information from here. Okay, get some information from here, and you can see that there are quite a lot of information on DLC funds flows, etc., on Alibaba long or short. So outflow, inflow, blah blah blah, is all here. So first thing first, right, what I would want to do, right, is I will go and look for Alibaba. So when you are searching for Alibaba, immediately you can see that there will be 5x short, 5x long. What is this? There are so many, stocks, so many different DLCs on it. So 9988. Okay, so this is Alibaba, the underlying. So usually I'll click on Alibaba itself, right, on the SocGen website. Then it will bring me to the chart itself, and it's quite clear that we can see there's a high volume cluster over here, and this is the reason why previously when it comes to this resistance, right, it was rejected, and now we are approaching this resistance again. Therefore, that's where I'm looking to take the target. I'm not expecting it to break out above. Okay, so when prices are moving, right, this is where DLCs really shine, because right, if you are looking at DLCs, what they do traditionally, right, like you are looking at CFD, you're looking at DLCs. DLCs, right, there is a built-in leverage component. For example, there is on the index itself, you got 3x, 5x, 7x, etc. So on the stock itself, right, on Alibaba, you can see that this is 5x. For CFD, right, how they do it is using a margin account. And from my so-called research, right, I also understand that for DLCs, it is a market traded product. So this is an exchange traded, and the DLCs are all listed on the exchange, on Singapore Stock Exchange. So the pricing is transparent. The pricing is every broker that you're looking at it, you will get the same pricing. Whereas for CFDs, it is a market maker model. So pricing may differ slightly from the actual price and across different CFD providers. So this is the number one difference that I noticed straight on when I was doing this research on DLCs. And then, right, having been an exchange traded product, you are able to use one single brokerage to trade this. So you do not have to go and open up a separate CFD account, which in most cases with Singapore regulated brokers, you have two separate accounts. You have one cash account, you have one CFD account. So this is all separated. And and what I mean here is, like, for example, if I'm using Poems, right? On Poems itself, I have CFDs, and then I have stocks, and then I need to have funds in both sides, okay? Because one is the stocks account, one is the CFD account. I need to have funding for both sides. If not, I need to do the transfer before I can trade either one of them. For DLCs, right, it is considered under stocks because it's an exchange traded product, and I'm able to immediately, okay, search for the DLCs itself. So for example, we have, if let's say I'm going to go long, I have DDOW. Immediately, I'm able to just search DDOW over here, and then immediately it will come out 5x long, SG, blah, blah, blah. Okay, so what is this whole DLC about then? How come there are so many? And this is where, right, I think it closely relates, or it's pretty similar to options, because coming from options background, right, I'm quite familiar with the strike prices, with Delta, Gamma, Theta, and Vega. So looking at this, the most sensitive one will always be startup. So the most sensitive, right, it's like the one that has the most representative, I feel, okay, to put it in layman term, right, from my understanding, is that it is the most sensitive, the most reactive, most current, most relatable to the current pricing. And previous ones, right, you can see that they have been launched slightly earlier, or in fact some of them, they are not as sensitive and they are not trading. Why? Because, right, when prices starts to shift away from the moment this contract is being issued, right, then what happens is that it becomes redundant, it becomes useless in a sense. So therefore, right, under the advisement of SocGen as well as investing, I was asking Ethan, right, I was like, hey bro, which one? How come so many different ones? Wow, what is this? What is that? So he said, okay, most of the time just look at the most sensitive, and then from my understanding over here, be sure, right, when initially when you're choosing the DLCs, right, be sure to go and know whether is it long or short. Short meaning you want it to go down, long meaning you want it to go up. Don't choose the wrong one. And then SG, right, doesn't stand for Singapore. SG stands for the issuer. In this case, it's SocGen, right? And then after that, behind the whole chunk of numbers, it's not for you to buy 40. I thought, I was like, hey, what is this 40 number? No, it's the expiration date. So-called is the longevity of this contract. It's until 2023, 4th of May, right? So looking at this, you will realize that, okay, how come I have a bid and ask over here that is so different from the underlying pricing? This is where DLCs, from my understanding now, currently, this is where they differ. This is where, right, they have their own pricing mechanism that runs in conjunction, that keeps this leverage factor intact. So for example, right, if you're Alibaba, so if I'm looking at 9988, right, if it goes up by 1%, your this DLC, assuming I'm looking at DDOW, okay, your DDOW, because it's 5x long, it will go up by 5%. And conversely, obviously, in the reverse is true as well. If it goes down by 1%, then your DDOW is going to come down by 5%. And therefore, right, there's a need for this pricing to be separate. It's a separate pricing mechanism. And this effect, right, or this leverage, right, actually compounds. So how does it compound? Because it is repriced every single day, right? So for example, if you have initiate a position today, which is a Thursday, then tomorrow heading over to Friday, right, it will be repriced and start off at another different price, okay, every single day. So it is pretty similar to how when I traded futures and I was holding a futures position overnight, right? It was mark to market every day, so every day it resets, okay? So this is how a leverage factor continues on from there, because this is where the compounding effect kicks in as well. Because if you got let's say $1, right, okay, if let's say you got $1, the next day is going to be 1.05, next day is going to be 5% or 1.05, etc, etc, okay. I mean, obviously provided that there is 5% gain from day to day lah, okay, or at least a 1% on the underlying. So the big question, right, comes to me from a perspective that, okay, I'm already comfortable using CFDs, I'm already using options underlying, then why DLCs? So this is where I realized, right, admittedly, DLCs, you have to be looking at very strong explosive momentum stocks. So immediately, right, when I understood the nature of DLCs, immediately I was like, hey, I've got something that I can use. I have got a momentum trading strategy that I'm able to use to so-called unleash the potential of this DLC. Because at times, right, the greatest foe to a trader, it is where pricing don't move. It's not about the pricing go up, the pricing comes down. Both ways, as a trader, we can be flexible, we can be long, we can be short, we can be making money, or losing money lah. So obviously not everyone is making money. So when it comes to DLCs, right, I realized that, okay, it is able to amplify some things that certain counters that don't move as much, especially if you are looking at Singapore stocks. And this is where I think it clicks. Some Singapore stocks, right, you don't even get a 1% move every day, especially those bigger stocks like UOB, like DBS, right? They don't really move all that much a day. So how are you able to trade it successfully and be able to get significant or at least substantial meat lah, okay, substantial premium while trading this? That's where DLC shines. And with this, right, it also occurred to me, right, in one very outstanding point, which is when we are using DLCs, it cannot be for investments. Because if you were to do it for investment, then likely it will not work out well in the long run, similar to CFDs as well. So we have to take explosive trades. The trades usually can last for a couple of days. From what I have gathered, from what I have understand, I know that we cannot be looking at this for more than a couple of weeks. So generally, maximum is a couple of weeks. That's about it. And it will be best suited, right, if we have got an explosive move that is going in the favor. So you get 2-3 days of good movement with the compounding effect. If let's say, okay, we have plus 2%, then after that we have plus 3%, and then plus another 1% in 3 consecutive days. Multiply this by 5 times, right? This will be plus 10, this will be plus 15, and then this will be plus 5. So you can see that the gains are magnified. So if you are, of course, taking the wrong side of the trade, then your losses will be magnified as well, just to be fair with this. And how do we negate, how do we mitigate that? That's where, right, later I'm going to so I was thinking, how do I set a stop loss on something, a instrument where the pricing is not the same? And this is where, right, I realized also on the price matrix, I'm able to know if the underlying goes to a certain level, what is likely going to be the price of this DLC. So this really helps me to do my trade planning, to know how am I going to put my stop loss, and also, of course, work backwards the position sizing. Okay, so far, this I'm liking what I'm seeing in this journey. I'm liking this. And of course, there is also some sensitivity. So what is this sensitivity about? This sensitivity is about for the DLC, right, for this, half a cent, right, is one tick. Okay, half a cent is one tick. For it to change half a cent, how much must 9988, which is Alibaba, need to change by? It only needs to change by 11 cents. So if Alibaba goes from where it is now, it goes up by 11 cents, it jumps half a cent on your DLC. If it goes down by about 11 cents, then you jump half a cent down from your DLCs. So simply, this is how sensitive it is, okay? So this, I find that it is great. It is a very great resource, a great website for me to find a lot of information that I need. Because when I'm trading a certain stock, let's say I can be looking at UOB, immediately all the various DLCs will come out, but I wouldn't know which one is the most sensitive. So I have to click in, and then after that, the most sensitive one will be highlighted. Then I know that if I want to go long, it will be on this DHBW. So immediately I can head on over to my platform, right? And then I can search the code for it, and immediately it comes out, and then I'm able to trade it just like any other equities. Okay, so looking at 9988, I think currently today I don't really have a setup over here. I'm looking at UOB. Okay, so UOB right now is coming down, so this makes a very nice short. Okay, this makes I would say a pretty nice short area, and if I were to come down to the next support area somewhere around there, but obviously, am I going to short like like chasing the bottom? That's not my style. I always like to wait for a setup. So if it does pull back, right? If it does pull back to $28, I think this is where I'm considering, this is where I'm looking, this is where the structure at least still makes a little bit of sense. So I wouldn't be shorting UOB right now, but so if let's say I'm looking at this, right, I search for UOB, and then if I go over to this one, okay, 5x short, okay, the 5x short over here, then I can go on to the price matrix. This is where I find it very interesting, because if I want to let's say, for example, okay, if I'm going to do this, and if let's say this area is going to be a resistance, right, and I want to be initiating my short somewhere around here, which is somewhere between $27.50 to $28, what am I going to do? So I'm going to look for when the prices is going to be like $28.50, $20, it's somewhere around here. So where is the DLC going to be? What is the price of the DLC likely going to be? It is going to change from where it is now, 160 to 155. Okay, it's going to change it to somewhere about 155. And assuming right now the prices comes down here. Okay, so assuming right now here, and then it continues on and on and on, and it hits the other area, 26.50 or so. Okay, $26, $26.50. From where it is now, which is at 1.62, if it goes to 26.50, how much is the change? The change is going to be about 12 cents. So this really allows me, right? This really allows me to know that, okay, with an underlying movement that is pretty, muted, pretty small, let's say from here, it comes down to here, it's just a 2% movement. But on the DLC itself, right, how much can I expect? Okay, how much can I expect? So this really helps me to do my planning, my targeting, and with the movement that is magnified as leverage, right? One other thing that I can think of that appears or is in line with my trading strategy is that we have to be patient. So these are the learning points that I'm sharing with you. Like I said, I'm documenting down this journey. So please be patient with me if you're a veteran of this instrument already. So you have to be patient to wait for your trading setup. And this is usually what I advise most traders to do. You have to be patient, wait for the price to happen. Don't just go in chasing, certain prices. It's already at a low, don't go and short sell it there. It's already at a high, don't go and buy it there. Wait for a better pricing. So we have to be patient, and we also have to watch for the volatility. So this is where I think that to give a unbiased and a very raw opinion on what I think about DLCs, for trending markets, it works the best. Okay, if you have days that are trending fiercely upwards and fiercely downwards, it works the best. So if you have a very predictable trend that happens, a small movement every day, and then it happens over a couple of days and a couple of weeks, that would be the best. So therefore, right, if let's say we are looking at Singapore stocks, UOB in this case, then it is trending downwards for quite a while already. This is best suited. Okay, the DLCs will be very suitable for this. But if you are looking at, for example, Hong Kong stocks, especially if you are trading Hang Seng, okay, HSI, and HSI, right, at times, right, they can be quite notorious, okay, in the sense, if you were to look at, let's say the index over here, HSI, you can see that HSI is a lot more choppy. And even if you are looking at intraday, right, you will realize that it doesn't give a solid defined trend. It can gap down and then it will go up, and after that, it go up, go sideways, blah blah blah. So this is 2 separate days, okay? So you have one nice movement, then it continues, and then before you know it, it goes up higher and then it flushes down. So all in all, right, if you look at where it was like 1 week ago, you draw one line across, it is largely still here. So this is the kind of very volatile market condition, right, where when you are using DLCs, you have to limit the time duration. It is good that, you can catch 1 day, second day, but it will be quite disappointing, right? If you have 1 day, second day, the third day it gone up, and then you never take profit, and then it comes down, and this flush down, right, will potentially erase the loss. So what I realized that I can do to mitigate this risk, right, is that when I'm doing DLCs, when I'm using DLCs on stronger, more volatile, strong movement stocks or markets, right, I try to limit the duration to intraday. So this is where one part it really shines because it amplifies. And we know that in intraday, right, if you're looking at a normal day market movement, in the US, a normal market movement, right, is 0.7%. And because DLCs is only traded in Asian hours, we are looking at 0.3%. And as a trader, 0.3% basically you can't make money. So when you have the DLCs, okay, when you have the DLCs, it's amplified by 5 times, and that's where it goes to more than 1%. And therefore, it's still quite, I would say, acceptable. So intraday, right, this is a very strong tool, a very good instrument, in my opinion. And this is where the leverage, right, and it doesn't comes from the margin, because when leverage comes from the margin, we are susceptible to the margin call as well, as some of us have experienced trading using options, trading using CFDs. If you have not been margin called before, then you are either very lucky or you have not traded enough. Okay, so margin call, right, comes from where, we are always required to put up just a small amount, and then when we maximize the position sizing, or we go above a certain size, when the market moves against us, that's where we have to top up the margin. For DLCs, it comes as a pleasant surprise, right, that I realized that because of the separate pricing mechanism, there is no such margin call situation. I will never lose more than what I put in, because the DLC, right, can run down to 0, okay, as what you can see, or from what you see from like for example the UOB, right, okay, then you can see that some of the DLCs are really run down in value, like for example the one that are traded right now is 150, and if you go the other way and it's been issued for a while, it goes the other way, then it runs down to 0.35, it runs down all the way, it can go down to 0. That's pretty much how much you are in for, okay? So I like the fact that this is capped there. In all honesty, I like the fact is this. Why? Because I find that a lot of traders, right, especially retail traders that do not know how to limit their risk, they tend to overtrade, oversize. And by this natural mechanism that is built into daily leverage certificate, it allows us to cap our losses at the amount that we put in, because it can run down to 0. It's like buying an equity. What's the worst? The company goes bust. So this is the same case, similar for DLCs, with the advantages that comes with it, because it amplifies a really muted, a very, very quiet market. So yeah, and this is where I really find it shines as compared to the rest of the instruments that I've used so far. All right, so looking at the price matrix, right, it also allows me to know how do I where am I going to put my stop loss. So for example, if I have already entered, let's say, okay, U11, I have entered at 26.95. This is my DLC price right now, 1.642. And if it goes to my target, I am going to likely make, 12 cents, 18 cents. And if I work backwards with my position size, multiply that by 100, then, per lot lah. Okay, multiply by 100, that is 12, 20, then multiply by 1,000. That is going to be that is going to be 120 over dollars, which represents quite a good return on the small account that we have. Okay, so 7% movement, and to reach 26.55, right, I would say it is very, very doable, because looking at U11 and how it goes now, right, it is likely going to take a couple of days, given that the last time it did this kind of drop, right, it only took like about 3 days. So you're moving forward about 3 to 5 days. I think that's pretty much about it. It's quite straightforward. And looking at this, right, I actually quite like this price matrix, because let's say if I'm going to place my stop loss at $28, I know that on the DLC, I can then, after I have triggered it, I am able to put this stop loss amount in there as well. So therefore, right, besides the budget, I'm also able to cap my losses. I'm also able to calculate that, okay, if I'm going to be losing 30 cents, per DLC contract, okay, so and I'm prepared to lose or risk $300, of which, okay, for a small account, let's say of 3,000, maybe I'm going to risk 5%, okay, $150. I know how much or how many can I go in, of course, rounded to the next round, to the next 100, okay? So it allows me to immediately know, okay, where am I going to put my stop loss? How am I going to put my target? What is the corresponding prices on DLCs, etc.? Which I find that this is a very useful tool, because this was one of my first question when I'm using this, like, how do I put my stop loss? How do I put my target, etc.? Okay, so this documents the first part of my journey venturing into this Kopi Money Challenge. Admittedly, I feel a little bit stressed, because I am a kind of a newbie when it comes to this, as compared to Dan, compared to Lin. I see they keep posting. I'm like, walao, why you all so fierce one? Chill leh. So if you are in my situation, if you find this sharing valuable, you find this enjoyable, please do give me some form of encouragement. I don't post quite frequently on Investing Note as well, but if you come across this post, right, do engage with me. Please give me some love, because I also feel very stressed. Sometimes later I can, this guy lousy, whatever lah. I'm just gonna document what I do lah. I'm still a newbie. Everyone has to go and start somewhere. Yeah. So do connect with me as well. You can always give me a follow and on Investing Note, and then let's interact on here. Okay. So I have a great time documenting this first part of this many series. I think we're at least gonna be doing six posts, on this series, to document down different aspects. So as I've taken some trades on DLCs, in the next few parts, or next few installment of the series, right, I'm going to share with you how they turn out and what are some of the learning points. Okay, so thank you guys, and do engage with me, like this post and share with me in your comments below what do you think. All right, take care and catch you in the next one. Goodbye.